Hello everyone. So we'll just wait for a couple of minutes for people to join in. So just another minute or so before we start. Okay, so let's get started. Hello once again, and I hope you all are doing fine. The aim for today's live is to keep it very short and sweet, while of course making sure that you learn a thing or two that you're going to take back home with you. And just hit me in the chat box if you can hear me. Okay, sweet. I've been getting a lot of DMs lately, and I see the charts that most of you just keep sending to me. And the most important or the biggest problem that I notice in all of the charts that you all keep sending to me is directly or indirectly related to the market structure. So I thought of discussing market structure a little bit to, help you guys out, get into better trades, maybe. So the basics of market structure. What is a market structure? A market structure is basically just seeing where the market is headed, right? According to everyone. So understand that getting market structure right is the bare bone of any trader's career. If you don't understand market structure, you're basically going to be positioning yourself in a lot of bad trades where you'll be just losing day in and day out. So until and unless you do not understand what the market structure is doing or what the structure is doing and where it is doing what it is doing, you are most likely going to be liquidity for the market makers. What that means is your stop losses are going to be hunted everywhere each time. So you'll realize that most of the time when you think an area is important to you, but when you zoom out, which is your biggest tool in life, just zooming out. Once you zoom out, you suddenly have a different perspective about that area. So that is exactly what you have to master in order to, position yourself a little better in the markets. So as you all know, structure for everyone, like market structure, is this, which is an uptrend, and this, which is a downtrend. Correct. Now, what people don't realize is when you draw something out like this, you also have to realize that there is something like this happening inside of that. Okay, very simple. This is what is happening inside this area. Okay, so on and so forth. I'm just going to finish this. Okay. Now, what are you seeing? Are you seeing this? Or are you seeing this? Understand. You have to first understand and question yourself as to what you are seeing in the market. Is it this, which let's call this the higher time frame? We'll make the higher time frame red in color, and this is the lower time frame, which is green in color. Okay, just ignore this. Now you have to understand where you are operating. Are you operating in this HTF or LTF? And you also have to understand and take care of something else, which is, let's make this white. Okay, this is maybe your seconds time frame or whatever time frame this. Okay, you get what I mean. This, you have to understand which time frame you're operating off, and then you accordingly have to come to a conclusion and set your bias. Now, what I mean by that is, and this is basically the same with the downtrend. Things don't change. Things are still the same. Now you have to understand that when the market is moving up like this, say you are monitoring this area. What is this area according to you? This is a part of a higher time frame uptrend. But this area for me is a top in the sense that I'm going to be looking for shorts here. Why shorts here? Because I know my lower time frame is operating this way, and let me just draw this out to make it a little clearer. What is happening around this area is that the markets started shifting, started going up, and then what I will look for is a change in character. Change in character is basically what, if this is my point of interest and the market currently is here. In the high time frame, you might not see it, but on the lower time frame, the market is here. This is my area of interest. What will I be looking for here? I'll be looking for distribution. Distribution is what? Distribution is naturally going to happen. Since this is a break of structure, the market is moving up. And when it's moving up, it's going to accumulate here. So let's zoom out. So what is going to basically happen in this area is the market is going to be doing something like this, which we all know by now. This. This is exactly what you catch. You do not aim for anything else. This is exactly what you catch there when you're operating. So that's why I always keep stressing on one thing, that your for you to form your bias, you need to understand which time frame you're operating on. And once you understand which time frame you're operating on, you need to take care of all the other time frames. Everything is going to move along with the higher time frame, but that does not mean that you can't trade the lower time frame. So for me, all these tops, you can easily catch a lot of trades here. A lot of trades here. So what some people like to do is catch trades when the market is going up. So it's totally up to you. And most of the DMs that I keep seeing is what what you might do is you think this is just going up on a short time frame or a long time frame. This is just going up. You keep buying into it. You keep buying into it. You keep. Some people do this. Why? Because the one day chart is okay. Why? Because the 1 day chart is bullish. Okay, but if the 1 day chart is bullish, that does not mean you're going to get your long right now. That does not mean that you're going to be able to catch this move just because everything is bullish. How many times has it happened? Has it happened to you that you're not able to, capitalize on the move that is going on in the market? I think most of the times it's something that happens to everyone. Something that happened to me when I was learning. Something that happens to everyone. So you need to clearly understand that for you to form a bias and for you to know what the market is doing, you have to follow a market structure and understand if this is your area of interest. The market has had a huge run and this is your area of interest. What do? Do you directly set a short here like this, thinking that okay, the market is going to go down just because it had a run up and it has come to a supply zone? Definitely not. This is most of the times not going to work. And if it does work, it is not because you set up a short here and the market was delivering short. You have to understand that the red area what I'm marking is a higher time frame, and this is a swing point, and this is a swing point. If this swing is still intact, that means we are still bullish. Okay, if this swing does not break, that means there's no break of structure on the higher time frame. But but if this swing breaks, I know I can start looking for shorts in the market. And looking for shorts till where? The next liquidity, which is this, not this. This is never going to work out most of the times. Since what is going to happen is once the character changes, comes down, it is going to come up, test these unmitigated zones and go down. Then come back up, test these zones again, and then come down. Once it comes to this point in a bullish trend, what is going to happen is this is Wyckoff. Selling climax, automatic rally, ST, STB, and this is spring. Most of the times it's going to cut you off like this. So what is going to happen is you've loaded up your swing. That swing is the swing short. Swing short is maybe not going to work. You're out of the trade, and you've just been wondering that you've been waiting for this area to hit for a couple of months, weeks, years, I don't know. And once that the area finally comes, this is going to happen. So what you can do as a trader is firstly perfect your market structure, because if you don't understand the market structure, chances are you're not at all going to be operating in on a day to day level. So being a day trader, this is the most important thing for you. Only confirm trades at your zones. If the trade is not in your zone, don't don't trade. You don't have to trade everything, and even if you do end up trading everything, just make sure there's a system behind it. If there's no system, like we discussed in the last live, then there is probably not going to be anything fruitful coming out of the trade for you. So one more thing to understand is that this entire move or this entire structure is again going to be a part of an even higher time frame area, which could be this, which could be this. So you need to understand what kind of a trader you are, like we discussed last time. If you're a scalper, if whether you're a swinger or whatever you are, or however you trade, most of your problems are going to be solved only if you understand this. And once you understand this, everything else just becomes very simple. Just zoom out anywhere in the chart, you'll know that the market is only doing two things. It's either distributing or it's either accumulating. And if you don't believe me, you can just zoom in on any of the areas. Just zoom in and just see price wherever you want. What is this? All this is distribution. And this is distribution on a daily time frame, but that does not mean that on the lower time frame it is distributing, right? It's setting up for a big move, but that does not mean you can just short this market every day. It's not going to happen. When you go to smaller time frame, zoom out, what do you see now? You see it's accumulating, then it's distributing, then it's accumulating again for one more distribution. This is where you can start looking for shorts. Does not mean you can't take these longs. Everything is viable in the market. These longs are totally valid, which is exactly what I'm trying to tell you guys. Just because the market looks short, that does not mean you should just be loading up short. It only means that once the major structure is broken, like say for example, this is the major structure for me. Once this structure is taken out, I know shorts are going to give me a much bigger target than my longs. That does not mean that I just be stuck in the market thinking that I need to take a short, I need to take a short today, I need to take a short now. Nothing like that. Now all this is accumulation. Just open any basic Wyckoff chart, you'll know what I'm talking about. It's just going to accumulate, it's just going to keep moving. So what I'm trying to tell you guys is that market structure, don't run behind entries, don't run behind exits, don't run behind anything of that sort. Just understand market structure. You don't need to learn Wyckoff or anything at all. Just zoom out, see the market structure, and this remains the same. Go to your weekly chart. I'm going to delete this. Go to your weekly chart. What is this? Or go to a monthly chart. You will understand what I mean. What is all this? Distribution, accumulation, distributed again, accumulated again. This distribution into a redistribution to shoot up, distribution, and here we are. Zoom out. You'll see things differently now. This is just overall accumulation. It's just compressing. When things like that happen, it's going to shoot up. When is totally up to your understanding. You have to see where the structure is breaking. You see this just took off all the liquidity, all the shorts were liquidated here. You see this, you see this, all the longs were liquidated, and then the market was free to go. Now if you just follow market structure and you don't have a system, or you don't know anything, you just want to make money of the market, the easiest thing for you to know is market structure. Although it's not going to work every time for you if you don't add up things like confirming your zones, confirming your areas, confirming your entries and trades and trade management, it's not going to work. But if you just add everything, if you add market structure, if you add your zones, see, everything is just perfectly going to line up. And this is out of nowhere, this distribution later gets tested, where even if you don't know anything, if you just know your zones, you could have just taken a shot maybe here and held on to it. I don't know. It depends on you. I don't do this, but a good shot for me would be somewhere around these areas, like the one I took in Euro USD the other day. This one. So it just depends on you. It's endless. What you can do after learning the structure of the market is endless. You're going to see accumulation and distribution everywhere. You're going to find trades everywhere. But the most important thing is the trades matching your criteria. So if they fit your criteria and you think that it is going to be a potentially good trade that matches your system and ticks off everything based on the rules that you have laid down for yourself, it is always going to be a good trade. So that being said, that's market structure. Always remember things about market structure is a higher time frame is the most important one, of course. This, miss out on what the higher time frame is doing. Second is lower time frame. Depends on what kind of a trader you are. If you just like seeing daily time frames, you'll probably have to wait for a while for your zones to hit. Now, if you're looking at this area and say you're a high time frame trader, HTF, this is April 2018, and you want to take shorts here. You know the market is going short. You would have to wait for 100,000 days. That's exactly 1,000 days for your zone to be validated. So you need to understand HTF. Yes, it's the most important. If you're a swing trader, there are many things that you can do if you operate on the higher time frame, lower time frame. What does lower time frame mean? That you capitalize on every move that comes after the area is breaking down. Once you know that the structure is broken, you just start loading up shots. You just keep taking shots of every single zone. That also doesn't mean that you keep taking shots, because remember, when you're going short, this move that is happening down is also accumulation. So you know, once it cuts and breaks the above structure, you can start going longs. But when the higher time frame is bearish, you cannot expect, you take a trade here. If you take a trade here, you can't expect this to happen or this to happen. You'll just have to be happy with the liquidity you have on the top side or the bottom side. But imagine you catching this. Your shorts are loaded. Just go for the bottom liquidity, like this or this, wherever you want. You can all. That's why what I always say to everyone is that always let 10% of your original position run. If your bias is clear, if the higher time frame supports you, always let the 10% run, because all these things are going to add up. When you finally journal your entries and when you finally go review your trades, all these things are going to add up. If, say, for example, in this trade, let's just break this down quickly. If in this trade, I could have, I partially here. Why I partially here is because I was expecting it to come and take out my break even. But what happened is that the price started moving without any prior demand zone. So I was not scared at all that my break even would go. In fact, I was just waiting. I was just waiting on seeing what was going to happen. That's why my first partial was set here, which is the mitigation of this demand. Once I started seeing the price break down these areas, I was very confident that it was going to deliver and give me all my targets. So once that happened, partial here, I let my position run, and then I partial here, somewhere around those areas. I think it was a 1 is to 12 or something. So always see what the higher time frame is doing. For me, in this trade, the logic was very simple. Just zoom out, delete everything, see see what the chart is telling you. What is it telling you? Okay, this is breaking structure, breaking structure, breaking structure. All good. So why am I taking short? Simple. The reason that I'm taking short is very simple. This is inefficiency left behind by the market, which I know this is forex, so I know it's going to fill the inefficiencies, because the market makers have a lot of positions open, which is the closest demand to me. It's this simple. What is my final target going to be? This alert. If you see this alert, that's going to be my final target. Now, to expect bullishness, I want this to happen. So I'm obviously going to start looking for longs, and so can you if you're watching this. But I know that bullishness is not going to come just straight out of nowhere. For that to happen, it needs to go to an area, and the closest unmitigated area. So if you see this was also a demand zone. It's a demand that could not hold itself. So let's just delete that. And this was going to be my final target. I was going to let my 10% run to that. But since it was the weekend, if this was on a Monday or something, I would have let this run. And this is just simple market structure. If you don't know anything about trading and you still follow the market structure, you see these swings. Okay, so this is a major swing point. This, this, it's breaking down. You just keep taking shots when it's breaking down. As simple as that. So we'll move on to discussing this. First is high time frame in market structure, which is this. Second is lower time frame, which is this. And third is intermediary structure, which is going to be even smaller than this. Just basically this mess that we trade every day. So when structure actually changes is when you start loading up your higher time frame biases in. So when the higher time frame structure is breaking itself or is getting broken down, either way, you know the bias has changed, you know the markets are turning. But that does not mean you can't trade any counter trends. You can, and that's what we do. We trade everything that we see that fits our setup. So even in these shots, a lot of people I know took this shot. In fact, I was looking at this shot here. This was going to be a perfect shot. Now, if you see, just one more handy tip in case you guys are struggling with zones. This for most people, what is this? This supply is broken, right? For everyone, the supply is broken. On a lower time frame, if you see it, you see these wicks, all these wicks. What are these wicks? That's nothing. That's just the liquidity being taken. You go to a higher time frame, a little. Now what do you see? Do you see the body closing above this? I don't see it. What does that mean? That we still hold our bias. That's why we start taking shots. We just keep taking shots until the market tells us otherwise. Unfortunately missed this one. This was going to be a great shot, 30 pips in a few minutes, but I ended up taking this one for the same reasons. So that's market structure for you. And remember that we as traders can operate on any time frame and we can milk whatever we want that we see on the charts. Just that you need to understand everything. You can't understand 10% of what you need to understand. Making money is important, but in this industry, you need to give out time to understand why the market does what it does. So that's market structure. I think this should basically just clear out a little bit for you guys, since the most of the questions that I get on my DMs are just related to this, just trading the wrong side of the market. And hopefully you put in efforts and you're not stuck on the wrong side. Okay, now let's go to questions. You guys can just drop questions in, just start shooting them. Chandu Chitti. So, Chandu, I use IC Markets raw account, and I I don't live in India anymore. So I think there are a few Indian brokers that are regulated by the government. So you can look into those brokers as well. So what I use is IC Markets raw. It's pretty good. It's an Australian company, and they have zero spreads. So I hope you guys are clear about the market structure. Next time you see the markets, just zoom out. That's your biggest tool, and I think that's a superpower you can have in the markets. Zooming out. I can be on any time frame, and if I just zoom out, everything is just so much clearer to me. This is a break of structure. This is a swing point. We are doing this. What do you expect now? What do you expect the markets to do now? Test any of these unmitigated demand zones that can be a point of interest. Maybe make a swing point here, and if the market is bullish, look towards breaking this. You go to a higher time frame, things don't change. It's the same thing. It's the same thing. It's just the same thing all over again. Just see there. What changed? Nothing. I just zoomed out and things were just much clearer. Okay, 19 Aryan. Bro, I've been trading for 4 years and I've still struggling. See, man, that's I don't know what you've been learning and what resources that you've been going through or what courses you have tried for yourself. But I think just understand the simpler things in trading. It's just that if you overcomplicate yourself and you do things that you're not supposed to do, it's not going to work out. Can you give some personal guidance? Personal guidance. See, I don't have anything like that currently planned, but I think once the Discord server comes up or something like that, I might plan on taking like personal one-on-one Zoom sessions. So if that is happening anytime soon, I'll make sure that I post on the page and you can check it out if that is happening. But until then, I think you should just go on the internet, learn a little bit, and then I'm sure since you've been learning for 4 years, you know quite a lot, and you also know quite a lot of things you don't need to know. So the most difficult part in trading to be a better trader is to unlearn. If you don't unlearn, it's you're just going to be stuck with a lot of knowledge you don't need. So any more questions that you guys have? If you don't, I'm going to take your leaves. I was planning on keeping the sessions short, and that's what. See what Bitcoin is doing. Okay, perfect. From the time we put up the demand zone videos, it's been quite well. Hope you guys bought Bitcoin. And if you have, don't wait for the all-time high. Just understand. Don't wait for the all-time high. Maybe just unload your position a bit here at 50,000 or something. Always better to be risk-free, and then maybe if you're operating in futures, you can always go to break even, or you can always trail, seeing what the order flow is doing. We have a trading psychology video sometime. Trading psychology video, I'm not sure what exactly you want in that. And if you want, I can maybe make a video since again a lot of messages about the same thing. So I can maybe try and then put a short video of what you can do. I think we did discuss a little bit about psychology in the last video, but anyway. Chandu, what are order blocks? Why does price reverse tapping into order blocks? Okay, I'll tell you what something about zones. Like we did discuss in the last video. Now, if you are looking at this zone and say this order block, here, what do you see here in this zone? Okay, Chandu, answer this for me. Okay, go to any time frame. What do you see in that? What do you see in that zone? You see this area? What is that area to you? That area is nothing but a break of structure. And what exactly was I telling you guys right now? When a structure breaks like this, and you go to a smaller time frame, like we saw in the previous charts. This is a swing point. This is a swing point. This is a swing point. When it does this, what has it left behind? It's left behind this area. What is this? If you just add this, what exactly is that? That's where the orders for this move, if you see this big move, this impulse, all the orders rest here in this area. This is your order block. Order block is called an order block for that exact reason, where you know price is potentially going to come back, and institutions don't trade like us. They always have both positions open. They'll have longs, they'll have shorts. They just can't. They have to mitigate all the risk that they can because they operate in huge amount of capitals. So here, this area is where they have most of their orders open, and when the price is here, these positions are basically in huge losses. And as you obviously know how manipulated the markets are and how the institutions manipulate everything, the most the most interesting POI for you is going to be this block here. And what is going to happen at that block is if the entire structure of the market is bullish, like it is, if you can see, it's just started turning bullish, broke a structure, tested these demand zones, tested again, it's ready to move up. And these are called continuations. Once you find these continuations in Wyckoff, this is called a markup. You see this area that I marked, although this is a daily time frame, this is on a much smaller time frame, but you can see how it worked. This is also an order block there. Most of the orders are resting in this area, which are open, and once the orders close, it's going to do something like this. So since there are a lot of open orders in there, and also if you see this area, this entire area, this is where there is an inefficiency in price, meaning price has not traded these areas well, which is what, 46,300 and 45,000. So they want the best possible prices at everything, so it's going to do this and continue. If it continues or not is not something that we can predict, but if you have your confirmations, if you see Wyckoff and it does something like this, you can always trade this area. I don't know what it does, but we'll just see. Yeah, there. So that's why it reverses most of the times, but you add that with your market structure, your zones, and you can confirm it very well. I mean, that's what we do as traders. Just look for an area, confirm those areas. So I hope that answered your question. And if there's any more questions, kindly let me know. So I think we've covered everything that I wanted to for this live. It was all about market structure, since it is the basic principle when it comes to smart money. So the faster you learn about market structure, the better it is, and then maybe you can add a couple of more things to accelerate your trading career. So I think that's it for today's live, and I hope you guys can take back a thing or two. And I'm glad it helped you if it did. So see you guys soon. Bye.